Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today not really knowing what to expect. Basically a flat open. Off the bat, it seemed like they were trying to sell the S&P. They were coming in selling the futures. And you had some strong stocks early on that made a nice push while the futures were going lower. And then later the ISM came out at 10 o'clock and added some pressure to the futures. And then some of those stocks that were acting stronger, some of the banks, some of the high beta names, they started to, after pushing through previous highs, they came back in, giving us some faulty signals that, maybe the bears have enough. Maybe the upper support could break. Maybe it's finally the time for a rest, right? Everyone's back from the beach. Everyone's home from the holiday. Here come the sellers. And lo and behold, if you try to add to your shorts at support, the same trend we've had basically since the June 4th lows, you didn't have success. Listen, I tried it also. I had a few trades. I actually kept my distance off the open. I missed the first Apple trade long. I missed the Amazon trade through 250, and basically tried to buy support on Google around 680. And then I went short Amazon, a little early before the reversal. And then, PS, once we came down and broke below 140, just say 25 on the spiders, and then bounced back, I'm like, you know what? Let me give the bears the benefit of the doubt. Let me see if I could short the spiders because I came in pretty much flat after last week, paring my positions down, and I got stopped out. Bears had no control. They bent the market, couldn't break it, same story, and then I switched some gears and played Apple for what was a strong move in the afternoon. It showed relative strength all day, and now day one into the new fall season, and it looks like the same complexion. Obviously, we still have the ECB on Thursday. We have the jobs number Friday. But if you take a quick look at the SPX here, you'll see that this level that has been basically holding, during the previous 2 weeks is still intact. We do still have this outside day where the market tried to push through. What was that? That was 1422. Made a outside day in reverse. A good time to take some positions off. A good time to switch gears after a really nice run that it got accelerated on August 3rd. So why not, right? Nice, almost 2 weeks of big time gains. Outside reversal technically. Time to switch gears. Now you take a closer look here, and you have the same trend. Okay, we came down, we briefly broke below 1397. What was the low here today? 1396, but no follow-through selling. So uncommitted bears covered, closed off the lows, and now we still have a defined range. You have this descending channel here that's controlling this move or keeping it intact, and the longer we stay above this level, perhaps getting through Thursday, the more the higher the probability we break this and test the highs. But again, this is your defined support. I know for me, I tried shorting after a move lower. You look at the spiders here, and it didn't prove fruitful, right? Here is the lows. Here is the 8-day, which we broke, but held the 21-day. Look how many times, along this whole course of action since the June 4th lows, where we came in, tested the 8 and 21-day, then rallied off it, briefly broke below it, came back above, briefly broke below it, came back above. This one, oh my goodness, we tested the 50-day and then came back above it, tested the two of them. So here we are, they're getting closer. We're consolidating for a bit longer as we've had a lot more of a move, so it takes more consolidation to build a new base. And at the same time, the 50 days moving higher. You have this more gradual uptrend moving higher, and we're still holding in there. If you look at the 5-minute chart, let me just show you why I put a stop in. Guys on my my virtual trading floor saw that I went short. Yes, red dog is not a permable. I trade the action. And then off the bat, here is a quick move that basically failed, right? Whereas today is, boom. This was when it broke below, that first we talked about 147, then it broke below this area, and then it broke below that area as well. And then right around here, I'm like, you know what? Let me short a little bit. I'll short a little bit. Maybe actually it was right around here before leaving for for a few meetings in the gym. Actually, I'm like, here's a move down. We put a short-term little pivot in, bounced off it. I'm not going to add down here. I'm going to short a bounce, but I'm going to put my stop in at 140.65 because if the bears have any control, they should not have let this spiders regain this area, right? If you want to draw a little bit of a bear flag, right? This is your pole. Here's your flag. They should have been able to contain the bottom third of this overall range, which they could not. So I left. By the time I came back, I was stopped out right around 140.70. lost a little bit of money, right? Not so bad. Tried around 140.40, lost 25 cents. Better than losing this. Better than, cost averaging it all the way up and then getting capitulated out right here into prior resistance where some guys might have even shorted for a cute trade that closed off the highs. But it was worth a try, and we held again. And if you look at the chart of the spiders, every time, we've come in to the bigger support areas, there were better buys than adds. So maybe one day that changes, but if not, you're going to see, a lot higher prices. Apple, true leadership once again today. Take a close look here. That we've had so many nice moves in Apple, starting from here was your earnings miss. Right here, it got in the gap. Boom, powerful. Here's when you could have, got back involved when it showed commitment. Here's your ad, and then pow. This is your Samsung news. Since then, it was very choppy. Didn't hold the gap, so it showed you were in no rush to get back involved. Then on Friday, you had this 80-20 reversal, right? So what does that mean after a move from 680.87, right, down to as low? The low here on Thursday was 662. Well, that's not bad. 18 points. It pushed below, breaking the 8-day, got people out, came back above. There's your swing long. There's your try. There's your get a feeler on or more, right around 662.85. I was not here to do that. I was out on vacation, recharging my batteries like I told everyone else to do. So if you missed that, the next buy price was once it went through 668 to show you continuation above Friday's high. So if anyone was short and they didn't cover here, said, oh my goodness, let me cover here because we now have a nice little wedge pattern. I posted this on Twitter. You could take a look at it. It shows you, a wedge type pattern. Everyone knows what a wedge means. It's a pattern of consolidation after a big move to digest it, to figure out which is the next direction. As of right now, looks like it got resolved to the upside. Closed near the highs, and now this is your next point of reference. Next time we get in motion is when we clear this pivot of 680.87. So it's worthy of a tier 1 up here showing you commitment. There you go. Today Google somewhat did what Apple did last Friday when they shook it up. When it broke a higher level, went below, and the level on Google was 680. I tried it there, got stopped out early on, and then later in the day it reclaimed it. So if you look overall at Google, you look at the pattern here, still looks very constructive. Yes, it shook it up, but every now and then they can't make it so easy. It broke below this pivot area. The pivot was 680-ish, went as low as 673, didn't quite reach the 21-day moving average, which would have been nice. I was talking about 667 on that. That's actually the 20-day. Instead, it went below, came back above, and still looks good. It's had about a $100 move or so since the earnings or since the pre-earnings move, and this was really the buy right around 620. Overall, still looks great. I still love it for higher prices into the end of the year. And, there it goes on a macro basis, and then you go to your monthly chart, and still, there you go. Made a high in 2007, has a lot more going for it now. Still looks really good. Nice inside move so far. And there's your high of 747. Amazon, I'm not going to really show you the chart. Pushed through 250. I remember last week one of my friends on Twitter said, what do you think first? 240, 250. I'm like, I'm not involved, but gun to head, 250. Today I went to 251. The bank showed a little resilience today. They showed you a little bit more commitment, some leadership, which it hasn't done in a while, but not saying it's anything worth writing home about, but still moving higher above the 8-day. Didn't close on the highs, but lethargically moving up above the 200-day now. These stocks are in the game. There's not much more resistance until about 110, 112 here on Goldman. JP Morgan, nothing to be so excited about, but I guess we could look here now at a really, really tight inside range, right? Here's, I haven't seen JP Morgan this tight in a while. So if you draw your little lines here with your crayons and pencils, there it is right in here. So basically gets above 37.40, could go in motion to the upside, breaks below 36.71, could correct to the 50-day. But as of right now, at least we have a tight range to trade. So it's something I'll be watching in the next few days. Gold, two different trends here. So far on the move, both ways looking healthy. Here's your high back of almost a year ago. Here's your lower high. This is that pow, Fed day when they said no more QE, or the market said it, then it controlled it. Here is your nice entry. We talked about it. If you were here trading over the summer, you knew this is when we bought gold. And then all of a sudden, quick move to this trend line. This trend line at first acted as resistance, which usually happens at a trend line. And then after consolidating this 4 or 5 day move, power right through it. So I would say as long as GLD holds above this next level here, this high here, which was a nice pivot to buy if you were around on Friday, above this 162, what is that? Yeah, 162.45. You'll see continued commitment and potential upside. Same thing goes for SLV. You know, nice move. This was the day that it led the charge. We got along 27.45, time-stamped on the VTF. Everyone wants to talk about time-stamped. I'd rather let you look at my my back office statements, because that's when we bought it and we made money into this. It's better than time-stamped, but we try and give you guys our VTF so you could play along. Then here you go on Friday also. Commitment, never filled the gap, pow. Still time there. And then there's definitely some weakness out there. You know, but don't you have to be a stock picker to really make money in the market? Guys were talking about cat weakness, you know, oil services that, you know, have had a spirited move off the low. They weren't so great today. You know, oil was down. So it wasn't like you could throw a dart at the board, but if you could, everyone would do this. You know, you need to have the right stock selection, game plan, tier size, commitment, discipline, risk management. There you go. A lot of things going on in order to become successful. You know, if you look at Caterpillar, it's really been weak. You know, this entire year, starting from way back when it still, you know, started this downtrend right here on this small breakout failure. Then here was your retest, came down, lower high, broke big support right there. You know, came in, tried to break above, and I think I drew this line. I don't know who I was with. Push through failure right there. That was your exit. And then when this little channel to the upside got resolved, there you go. So there are ways to time these things. You know, I think this looks pretty good still. Home Depot, right? Still looking pretty good, right? Flagging higher. I drew this line here. Didn't work yet. Consolidating a nice move. This is still in the game. That's something to watch, you know, for tomorrow. Home Depot. Look at, let's see, what's Under Armour doing? Wow, my goodness. New issue making new highs. Wow, if you were an equity investor, I guess it's not dead here. You can go to your monthly chart. New issue. Look at that. Oh, you know what? You can make money. You can have winners. You could have waited. You could have waited a few times. This is when it came public. Quick move up. Came back down. Little wedge type pattern there. Crossed this area right here. And ever since, look at that move. You know, that's nice action right there. Look at the RTHs. Look at this move from the 2009 bottom, closing near the highs. Go to your daily chart. Action here. I think XRT was even stronger. You know, after testing support, kind of engulfed this area. Home builders still something to look at to see if we're really failing or not. And so you look here, new highs again. Doesn't show you like that's failing. Let's see what Lennar is doing. Woo! Look at that, poking its head up, still moving. You know, confirming this entire trend here, showing you could be in the right place, right time. Let's see what, you know, Mr. Toll's doing, still hanging out above the 8-day moving average. I think KBH actually, not a leader, but, you know, breaking above this area here to show you can make cash flow. So I hate the fact, and I keep, you know, I just don't like reiterating the fact that there is money to be made, but it's not like it's growing on trees. You have to have a plan. You have to have a process. You could be an equity macro investor, stock picker, and hold things and use your 50-day, 100-day, 200-day. You could be a momentum trader, use your 8-day, 21-day. You know, you could buy high, sell higher. Ooh, I know that sounds taboo, but it can be done, and there are stocks that do that. You could play short-term intermediate trends and like watching this 1395, 1398, trying to stay with positions until that breaks. You know what? Get net short, then see if we hold 1376, or we hold that level, go sideways, we start breaking above 1416. You get long, you take a little portfolio, then see how we act at 1422 to 1426. These are all things I'm just rolling off my head. There's no teleprompter in front of me. This takes time, it takes experience. This is how you maneuver the markets. You know, just basically pick your time frame, pick how much time you want to get involved, and stop complaining and start making some money. Scott Riley, T3 Live, the recap. See you at the morning call. Have a good night.